Welcome to Seeking Alpha Editors Roundtable, what moved markets this week, the week ending August 27th, 2021. The third week in August is actually the last week in August, but markets were not really that quiet. There has been a lot of bit of an uptrend here coming into the Jackson Hole Symposium, virtual Jackson Hole Symposium that kicked off this morning with comments by Fed Chair Jerome Powell that we will talk about that for now have been greeted but with bullishness by the market. So I'm curious what my co-panelists here are going to say about all this and about everything else. And I will introduce them now in no particular order. Brad Olesen, the VP of News, Kim Kahn, Senior News Editor, Stephen Alfer, Managing Editor of Breaking News. I am your host and moderator, Nathaniel E. Baker, Senior Editor of Strategic Contributors. So let's kick it off with Kim, as we normally do, to give us the big picture view of what moved markets this week.
Well, we've got markets looking like they're going to close out a winning week after Powell's performance today at Jackson Hole, which the market reaction was, you'd say it was, they took it to be dovish. Going into the Jackson Hole, the market, the stocks were moving slightly higher into it. They did have a chance to sell off, though, when there was some worries about the explosions in Kabul, and that kind of gave the market an excuse to shake off some of the froth from its all-time highs and get ready for Powell's speech. At the same time, you had Treasury yields climbing up pretty strongly during the week, right up until Jackson Hole started on Thursday with the first Fed speakers coming out. Then things held up, so you had the 10-year going up to around 1.35%. Kind of close to its highs for all of August. It's dropped off now post Powell, but it's still holding on to gains for the week. So you've seen a lot of recovery in inflation sensitive sectors doing well.
Interesting, yeah, and the sectors, curious there, Brad, what you saw from the winners and losers. We did have some earnings this week and a little bit of drama around individual stocks, thinking about Peloton. So who were the winners and losers this week, Brad?
So we saw a little bit of a mean reversion. We talked about how weak crude was over the past few sessions. That kind of reversed a streak of 7 straight losses earlier this week, and that consequentially helped a lot of these highly volatile E&Ps and oil servicing names: Devon Energy, Occidental Petroleum, Apache, Baker Hughes, Halliburton. I feel like I talk about those every single week. They're either in the loser column or in the winner column. What I loved about this week was that, at least in the top 10, it was a nice even split among the winners. You had 5 names in the energy column, and you had 5 names in gaming. So Penn National, Caesars, Wynn, MGM, and Las Vegas Sands were the other 5 winners among the top 10. Just, I guess, emblematic of a little bit of the reflation trade is back on. Delta variant is still a concern. There are some pockets that are growing, but I think the market is looking a little bit ahead here to the fact that maybe we're moving more towards herd immunity. I'm not so sure. That being said, there were some positive indications from the retail space with, as you said, now with some of the earnings. Best Buy was pointing to really strong consumer demand in their earnings. Kohl's talked about a turnaround in the consumer, and they raised their outlook. And then on the other side, the weakness you saw were all these defensive and staples names, the names people used to plow into when strains of COVID decided to rear up again. So General Mills, Dollar Tree, JM Smucker, with tickers SJM, were all calling out. Not all of them, because they all didn't report, but names like Dollar Tree, for example, and others did call out inflationary pressures, like we were talking about at the top of the show. Seems like, yes, there is some sort of degree of pass-through of inflation, but it's clear that at least among some of these names, these are low margin names typically, they are seeing some inflation stick around, which could impact some of their margins.
Stephen, what were you watching? I know there's been a lot of debate about the Fed and the Powell comments. What's your take there?
Yeah, I mean, there was no major policy announcement there, which really hasn't happened since Ben Bernanke many years ago. But I think it was important. I think Powell's speech did lean dovish. I think it was a pushback against some public comments by others, Bullard, Bostic, Harker, leading up to his speech, those guys seem to kind of want to move aggressively towards the taper. Powell to me, indicated that he has no intention of aggressively moving towards the taper, and markets are reacting positively. Bond yields are down, gold's up, dollars down. He's clearly learned the lesson of, as we talked about last week, of Jean-Claude Trichet, who tightened policy in response to some ugly headline inflation numbers and helped contribute to that, to the EU's debt crisis and economic crash. And Powell's clearly learned from 2018 when he hiked rates and caused a bit of a market panic. So I don't think he's going to move aggressively at all to taper.
Let's move on to the next segment of the show, where we discuss our favorite stories that we've seen, edited, contributed to on Seeking Alpha, or perhaps seen elsewhere on the Twitterverse. Is that a word? I think so. Or elsewhere. Let's start with Kim.
I want to look at the mega cap stocks and a couple of different things that I saw about them this past week. We're mentioning tapering, and B of A was out with a chart today showing just how much these stocks have benefited from the QE that's happened since the financial crisis. They're looking at all the way, since the $22 trillion of global QE, so the Fed plus ECB and others, that has gone in and just has outsized effects on the stocks we're talking about: Facebook, Apple, Amazon, Google. They put in Netflix in there, Microsoft, and Tesla. And what happens to those stocks that are driving the market when the tapering starts and the taps of QE turn off again? It's going to be interesting.
So I thought there was just a general theme we noticed this week, which was the corporate sector and market weighing in on the health issues. So as much as people may debate the health policy coming down from the top, companies aren't waiting. Delta, the story that jumped out to me was Delta's insurance premium levy on its own employees, amounting to about $200 a month. So this is basically a market-based solution for changes to vaccination policy. So if you're not vaccinated as a Delta employee, you will now have to pay an extra $200 a month. I guess you could say this is very similar to the extra premiums that smokers pay, for example. And it kind of falls into the ideology where no company has to give you a job. No company has to serve you anything. No shirt, no shoes, no service. We've all heard that refrain. And this is all born out of the bottom line, right? So Delta is large enough where it does self-insure. That means they don't use a health care company to administer the cost. All of the cost of hospitalizations is borne by the company. They estimate that at about $50,000. And this policy came out of the fact that all of the hospitalizations that they've seen from COVID were 100% due to unvaccinated employees. And at a cost of $50,000 a person, that adds up to quite a pretty penny. And I think that just kind of, we saw a couple other indications also in the market where some hedge funds, at least as far as the financials industry is concerned, are also leaning more towards requiring vaccinations, as the condition to returning back to the office. Point 72, which is the fund run by Stevie Cohen and Millennium Management, just to name a few, are some of the ones that are mandating vaccinations, just a long line of companies. And I think the military even also too is requiring vaccinations, just saying you don't have a right to visit our office if you're not vaccinated. We all talk about the freedoms here, but you also have their rights. Do you deserve a job? You're not necessarily entitled to. The company can do what they'd like to do. So a lot of market-based solutions here to a health crisis, which I thought was rather interesting.
Yeah, I've been in New York City this week, and for the first time ever was asked for my vaccination card, and additionally for ID to prove that it was me on the vaccination card. Although those vaccination cards, I have to tell you, they aren't particularly difficult to forge, one would think. Actually, I wasn't even asked for the physical card, but a photo was sufficient. Anyway, Stephen, what about you?
All right, this podcast is getting interesting.
Mm.
I love the earnings call transcript service on Seeking Alpha, and Burlington Stores is not a company I've really paid attention to, but I was reading the transcript from their earnings call yesterday. Their CEO is Michael Sullivan, who apparently is a very straight shooter. So I found it a really cool read. He was talking about the supply chain issues, and this isn't new news, right? That's been on the front pages for a while, but it's interesting to kind of delve down into an individual company and see how it's affecting them. And He said they can get product, but it's at a much higher cost. So operating margins are going to get squeezed very badly. He said the situation's getting far worse each day that goes along. Of course, Burlington stock got absolutely smoked yesterday, partly on that news. The CFO notes that, to put a number on it, it used to cost pre-pandemic about $1,500 to get a shipping container shipped from China to the West Coast of the US. Now it's $15,000 and it's rising every single day. And he said there's blocks at every part of the supply chain, not just shipping from China, but trains, planes, everything. There's just not enough of them. And then they also said that they expect the supply chain pressure to break, but not until 2022. And at the same time, they're seeing a slowdown in consumer spending coming alongside that. So you're going to have all these retailers flooded with inventory at the same time consumer spending is slowing down, which is not a great combination. Unless maybe you're an off-price retailer, you could have your pick of plenty of product to stock your shelves with.
All right, so that completes this week's show. Thank you for watching and listening. If you've been listening, be sure to check out the video, which airs earlier than the audio, namely by 4 p.m. on Friday afternoon at the website seekingalpha.com/videos/alpha-talks. And if you've been watching, be sure to check out the audio, which is part of the Wall Street Breakfast podcast and is released at 6:30 a.m. on Saturday morning. And with that, we thank you for being with us and look forward to speaking to you again next week.